Hi there, Adrian here, mortgage broker based in Sydney. On this channel, we talk about all things lending, finance, and investments. Now, on this video, we're going to be focusing on home loan refinances and what are the four main reasons on why we refinance and where you need to put the focus on. So, item one, normally we're either trying to lower the interest payment or lower the interest rate. Two, we're looking to debt consolidate. So that's if you have a credit card, personal loan, car loan, things like that, and you want to pay them off. And then after paying them off, you want to put them into the mortgage, okay? Now, you can put them into the mortgage on a different term. So I'll give you an example. So you could have a 25-year home loan, all right, but your personal loan may only have 4 years left. So what you could do is you could pay it out using the home loan attached to your property and then put it on a separate loan split so it doesn't get chucked into a 25-year mortgage. And then you could put it on the same 4-year loan term, all right, but obviously you're getting a much lower rate on a home loan compared to a personal loan. So a personal loan, the rate might be 8 to 10%. All right, but as far as your home loan, it could be 2 to 3%. So as long as you're not chucking that loan balance into a 25-year term and you're paying it off inside of the 4 years that it had left, you're ahead of the prior situation. All right, so that's the second one. So consolidating any debt, freeing up some of your cash to pay things out and making your life a little bit easier and lumping everything into the mortgage for one payment. Third thing that you could be doing is topping up the mortgage. So most lenders allow you to take money out of a home loan up to 80% of whatever the value is, and you don't have any lender's mortgage insurance. All right, so a lot of people, what they do is they refinance, they pull money out to buy another investment property, and just be very careful on the reasons for pulling the money out. So they could be for home renovations, they could be for funding an investment property, they could be for buying a new car, things like that. So most banks will do up to 100,000 pretty easily, but then as soon as you go over 100,000, there are a lot of banks that are easier to deal with than others. So there's about kind of 7 to 8 banks that do large cash outs very easily compared to others that want to control the money and not give it to you. So I'll give you an example. If you say that you're going to do a 200 grand home renovation, at least 3/4 of the banks are going to tell you, oh wow, you must be doing structural renovation if you're pulling out that much money. So you're moving walls, doing something with the roof, something structural, and then they think their security property is at risk. So what they do is they get you formally approved and then they wait for all your building quotes and then they pay the builders directly through an itemized schedule as opposed to giving you the money and allowing you to control it yourself. All right, so that's a key thing. If you're over 100,000 and you give certain reasons, at least half of the banks, if not 3/4 of the banks, want to control the money. The other half of the banks allow you to settle the deal, pull the money out, put it into your offset account, and allow you to control it. All right, and the fourth way that you're wanting to focus on when you're doing a refinance is to change the structure. So I'll give you an example. So I've got probably 20 to 30 clients in my loan book that I've had for more than 3 years that all they want to do is refinance every 2 to 3 years to get the interest rate down. And when they do that, they tick the loan term down. All right, so I'll give you an example. Let's say you're at 28 years right now and you go to do a home loan refinance. What they'll do is they'll drop the rate. Let's say it's from 2.8% down to 2.2%. So I save them 0.6. So they get a very good benefit in doing that. And then what they do is they drop the loan term from 28 years down to 25 years. All right. So when they squeeze it into a shorter term, the payment goes up. All right, but because they got such a large discount on their interest rate, most of the time the payment's about the same. So if you do that, 5 times over a 30-year period, you're actually paying off your mortgage inside of 13 to 15 years. So I've got a number of clients that do that. Now, other structure changes that you might want to do is, switch from principal and interest to interest only. Some people do that on their investment properties, or some people they change from variable to fixed, depending on where they see the market and what their personal circumstances are for the next couple of years. So that's just the main focuses on where you need to think on why you're doing the refinance, how you're doing the refinance, and then just dealing with a good mortgage broker that understands which lenders are better at each type of refinance, and then making sure that they're quoting to you and talking about lender policy on which ones can do what and how it's going to be easier at certain lenders. All right, so remember, that's just the four things to focus on when you're doing a refinance. So if you're enjoying these videos, please hit that like button, hit subscribe, leave me a comment, and make sure you tune in for the next video. All right, you have a great day. All right, bye.